Like, it does seem like we're headed into a recession here in 2023. The magnitude of that recession is debatable, but I think it's at least a light to moderate recession. Potentially, it's on the order of 2009. So I think it's wise to kind of like hope for the best, prepare for the worst. Don't get too adventurous. Like watch out for margin debt. From a cash standpoint, keep powder dry.
In this video, Elon Musk explains how to survive the 2023 recession. And Elon's first and most important tip for surviving the 2023 recession is to join Patreon with the card in the corner or the link in the pinned comment, access over 250 exclusive videos, and more importantly, optional access to my Tesla valuation model, which will provide a point of reference between the current perception of Tesla versus the reality. My bear case scenario for Tesla stock might be a useful starting point to see how the recession may play out. Now, the point of the valuation model isn't to predict what's going to happen. It's just a way to model some different scenarios based on probabilities, gross margins, vehicle sales, and so on. So I've already modeled the worst case scenario, at least close to worst case scenario in my mind. If you want to see how bad I think things could get, check out the valuation model. Let's get into it.
Elon, let me ask you just a slightly broader question. One of the things we just talked about was the regime change that's happened where, we all have to act differently now that the risk-free rate is probably going to get to 5%. And I'm just curious, across all your businesses, so Twitter, yes, but really more importantly, Tesla, SpaceX, are there decisions that you will make differently or not at all, or will make that you wouldn't have made otherwise in this new regime? And how often do you think about that kind of stuff?
Well, I think it's more like it does seem like we're headed into a recession here in 2023.
You'll be hard pressed to find anyone who doesn't agree with Elon on this point. 2023 is going to be brutal. I mean, I've been calling this now for the better part of a year. Now, I'm no economist. I'm just some idiot on the internet. But I've been watching, paying attention, having a lot of private conversations over the last 12 or so months, scratching my head, watching the Fed, watching the Reserve Bank of Australia, and I'm like, are you serious? You are literally trying to cause a recession, to destroy the price of housing, to cause people to default on their mortgages and the knock-on effects from that, all in an asinine, futile attempt to fight inflation while we appear to be in a deflationary environment. Now, there are some exceptions. Temporary supply chain shocks have caused huge issues with inflation on certain goods and services. Why? Well, if you don't make stuff, there's no stuff. And then when you start making stuff again, lots more people want to buy the stuff than the stuff available to sell to people. Therefore, prices to the fucking moon. And then there's the whole Russia invading Ukraine thing. Huge issues with energy prices. Again, I'm no expert, I'm no economist here, but I'm kind of scratching my head wondering, hang on a minute, exactly how is any of this in terms of interest rates going to impact the supply chain shock-based inflation? I don't think it will. It seems like the Fed is hell-bent on absolutely annihilating the US economy. It's going to destroy consumer confidence. It's going to be absolutely brutal. Yet still, more rate increases before they start to taper off and then eventually reverse course. The Fed are looking at lagging indicators, often trailing 12-month data. It's absolutely fucking insane. I don't know what the Fed's doing. I hope the Fed knows what the Fed's doing. But back to Elon's point. No question, 2023, despite the brazen gaslighting from the White House, who've taken the opportunity to literally redefine what a recession actually is, seems to be a recurring theme, doesn't it? Redefine gain of function research, redefine a recession. Anyway, I just had a random thought there. I think what I was trying to say is, 2023 is going to be pretty brutal. For those of you who are a little younger, you may not recall the 2008-2009 recession. I sure do. I was already working full time, so I was paying very close attention. Absolute bloodbath.
The magnitude of that recession is debatable, but I think it's at least a light to moderate recession. Potentially, it's on the order of 2009. So I think it's wise to kind of like prepare for the worst, hope for the best, prepare for the worst. Don't get too adventurous. Like watch out for margin debt. Like, I would really advise people to not have margin debt in a volatile stock market.
So Elon's first piece of advice for investors heading into 2023 is don't use margin. Unless, of course, you're okay with having a new asshole torn, in which case, go for your life. Now, a little bit of context that's kind of important. You may not be old enough to remember the dot-com bubble around 2000, but I certainly do. I wasn't an adult, but I was old enough to be paying attention and hearing about the absolute bloodbath. Amazon stock, interestingly enough, collapsed, and I mean collapsed during this period of time. From a peak closing price of about $4.75, yes, that's right, Amazon stock today now over $80 per share. Amazon stock between April 16th, 1999, and approximately 2 years later, crashing about 90%. Since that point in time, just for context, Amazon stock up almost 17,000%. Now, the reason I mention this is just to show how much some stocks can crash. Over the long term, Amazon stock's done just fine. But I tell you what, Back in 2000, things were pretty brutal. Similar thing happened around the global financial crisis as well. Amazon stock peak closing price, August 2008, $4.32. Not long after, crashing down around 40+%. Next minute, heading to the moon. There's been a lot of ups and downs. We can see some huge collapses here on Amazon more recently. In 2018, the stock shed about 26%. And since its most recent all-time high, Amazon stock currently down 54%. So to Elon's point about margin, as we can see, stocks can be volatile, especially during volatile times. And that brings us to Tesla stock. From peak closing price to current, Tesla stock down 69%. Now, full disclosure, I personally thought it would take an asteroid impact for Tesla stock to crash 70%, literally destroying one of their factories, maybe two. 60% I thought was the most realistic worst case scenario unless an absolutely insane, unpredictable event occurred. And I mean almost as insane as the Fed attempting to destroy the US economy in real time. Turns out we're here. If I had been investing on margin, I would have allowed for the stock to crash up to 70%. And I would have thought there's almost zero possibility it ever happens. Well, guess what, ladies and gentlemen? We're fractions of a percent away from Tesla stock being down 70% from all-time highs. Were I on margin, I probably would have been wiped out. I hope that answers the question to every single person who's ever messaged me, hey bro, why don't you use margin? And again, I'm not against margin. In fact, I'm still considering it to this very day. I'm just pointing out the ability for an investor to overestimate or underestimate something and how it can have catastrophic financial consequences. So back to Elon's point, in volatile times, and that is exactly what we're in right now, you're certainly playing with fire when utilizing margin. One final note too, just wanted to draw the contrast between Tesla stock since IPO, this is about a 12-year time horizon, and Amazon since IPO back in the late 90s. Check this out, looks pretty similar, doesn't it? Very, very, very flat, very little growth early days. I mean, in percentage terms, actually some really strong gains, even from peak Amazon stock more than doubling between 2000 and 2012. Not bad. Between 2012 and today, the stock's up about 800%. Tesla quite similar. Early days for a period of half a decade, not really going anywhere, then heading to the moon. These are both approximations of exponential growth. Volatile and lumpy, but there's a fairly clear pattern here. The reason that Amazon stock absolutely blew up was almost entirely due to AWS, their money printer. For some reason, autonomy just came to mind for Tesla and something about just getting started. Anyway, let's move on.
And, from a cash standpoint, keep powder dry.
Elon Musk obviously taking his own advice here, hence the recent sale of billions of dollars of additional Tesla stock to ensure that he, Twitter, and any of his other projects can survive even the worst of recessions. For the record, I have no dry powder, still buying Tesla stock. And yes, it could certainly go lower.
You can get some pretty extreme things happening in a down market. Like Brett Johnson, who was a CFO, who is a CFO of SpaceX, was at Broadcom in 2000. And he said that, and that's a good company making good products. And he said the from peak to trough, I think in less than 12 months, Broadcom went down 97%. So like even if you had a small margin loan there, you got crushed. It subsequently recovered, and I think to much higher levels. But
imagine holding a stock on margin only for it to crash 97%. I mean, who's going to survive that? Basically, no one. Unless you're using almost none of your margin facility limit. And I mean almost none, rest in fucking peace. And as Elon points out, the stock actually subsequently recovered and exceeded the previous highs. So why did the stock get crushed? Fear. Emotions. We're seeing the same thing playing out widely in the stock market today. In fact, another point I'd like to make, we're currently looking at a comparison between the performance over the last 1 year of Tesla stock, Amazon stock, and Alphabet stock. Now, I may be high, I may be hallucinating, but kind of seems to me like there may be a vague correlation in terms of how tech/growth stocks are currently performing. I mean, it's pretty hard to argue this point unless you're suffering from brain damage and or delusion. I think that's a fair thing to say, right? Seeing a very similar trend. They're never going to be perfectly aligned, but looks like they're generally moving in a similar direction at similar times, to suggesting that this is sentiment rather than company-specific performance. This comes back to the discussion about Elon sharing his dangerous thoughts and opinions, damaging Tesla, killing the stock price, and all the butthurt babies blaming Elon solely for Tesla's near 70% year-to-date decline. I'm sure there is an Elon element, but I personally believe most investors are massively overemphasizing how much of an impact his comments and his actions have made versus the overall macro environment. I don't know how much, but my strong hunch, it is a fraction of the overall impact on Tesla stock. I believe the core reason for this is a confluence of factors, including the war in Ukraine, interest rate fears, Recession fears, legitimate recession fears. Investors panicking out of growth stocks. Oh, in tough times, get rid of the growth stocks. Just buy the tried and true stuff. Blah, 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 blah. Time, of course, will tell. But I mean, I do just want to read this out loud. Amazon stock in the last 1 year is down 50%. Tesla's down 66%. Alphabet's down 40%. And I can do a bunch of others as well. How about Rivian? Down 82%. Following a similar trend, much more amplified declines. How about Lucid Motors, my favorite? Down 82%. How about NEO? I mean, why not? When in Rome or when on Google Finance. NEO down 63%. I'm just pulling these out of my ass. How about Xpeng? I don't even know the ticker for that. There we go. Let's have a look at Xpeng. Down 78%. See, when I look at something like this, the first thought that arises is, that's right, I forgot. The stock market in the short term is a voting machine and over the long term, a weighing machine. Right now, sentiment, votes, emotion is winning. But at some point, I think this will adjust itself. And one final comment on the contrast between Tesla's current stock price and the reality of the company and how bright their future is. Last I heard, Tesla's forward PE now is less than Chipotle. Call me crazy, but a multi-decade billion-dollar company growing 40-50% per year, riding the huge wave of inevitable EV adoption, developing their own autonomous vehicles. I've got a funny feeling that this doesn't make a whole lot of sense. And this is the important thing to understand about the stock market. During these volatile times, things don't make sense. Hence the wonderful saying, be fearful when others are greedy, and greedy when others are fearful. I think we're at peak fear, which I guess means I'm at peak shopping. As I record this today, just for contrast, Tesla stock is currently about half my bear case for 2022. And my bear case was based on very conservative estimates for deliveries, relatively low gross automotive margins, far below what Tesla's actually delivering and making good on, meaning the major factor for this disconnect, of course, is the difference between the multiple I'm using and the current multiple the stock market is assigning to Tesla stock, which again, I personally don't believe makes sense. It's important to understand the stock market rarely does make sense. Instead, the question is not, is the stock market getting it right? The real question is always, how wrong is the stock market getting it? And this goes both ways. Something can be overvalued or under. My favorite thing about what's going on right now is I'm documenting everything, every word I've said, daily videos discussing this topic. You have no idea how much I'm looking forward to revisiting these videos in a few years' time. I mean, I literally said it 365 times in a row in 2022. I mean, I tried my best. I'm just saying.
You know, if there's like mass panic in the stock market, then you've got to really be careful about margin debt. But I mean, this is just, as we know, the economy is cyclic. So and we're somewhat overdue for a recession. And my best guess is that, we have sort of stormy times for a year to a year and a half, and then things start to, dawn breaks roughly in Q2 24. If I were to get, that's like my best guess. Recessions don't like booms don't last forever, but neither do recessions.
And it's a 14-year boom, so a 6-quarter recession seems like that might actually balance out. The last time it was 4 or 5 quarters. It's not easy.
In early 2020, I made a video describing what a big opportunity a recession would be for Tesla. This was, of course, during peak fear when people were losing their fucking minds, if they had them in the first place. Literally everyone thinking the world was ending. This guy's like, no. But I still wanted to talk through some of the implications of recession, in particular, how a recession would be Tesla's biggest opportunity of the decade. We're now seeing the recession I was discussing back in 2020, a result of the insane lockdowns and all the other bullshit that happened, including the stimulus as a result. We had it coming, it's finally arrived, and yes, we are overdue for a recession. The market is cyclical. This is so important to understand. I learned about this concept first through real estate investing more than a decade ago. It's just how things work. In fact, I began buying real estate at the very bottom in the fallout after the global financial crisis. My first real estate purchase was in 2010, right at the bottom of the market. Got to ride that wave all the way. Things tapered off and slowed down around 2017, went flat for a few years and then repeated. I've been through 2 full property cycles already. I've been watching the stock market for a comparable amount of time. So, Tesla during a recession. A recession is Tesla's biggest opportunity. It's important to understand this because a lot of people don't think very deeply. They immediately have a gut reaction. They often fail to see the bigger picture. Here's the big picture. The automotive market in terms of automotive sales is also very cyclical and very closely tied to the broader economy. During a recessionary environment, automotive sales collapse. Guess what? It's going to affect the entire automotive market. The question is Tesla an automotive company? And the answer to that is, kind of, but not really. See, Tesla has such compelling technology, a new technology that's currently disrupting the old guard, the internal combustion engine vehicle, that what happens in a typical recession to a typical automotive company isn't as likely to impact Tesla as much. Now, I'm not saying there won't be any impact. Far from it. There will. There'll be some consumers like, oh, the shit's in the fan, I'm scared, I'm not buying a car, I'm not buying a Tesla, I'll just wait. There will be some consumers like this. There's another subset of consumers who can no longer afford to purchase a vehicle via finance because interest rates have gone to the fucking moon. Although, my best guess, a couple of quarters from now, they'll start coming back down. But again, this is the same guy who 2 years ago would never have predicted rates being this high because there's no way the Fed's going to destroy the economy. Just not going to. No, just not going to happen. Next minute, currently happening. So here's what you want to survive a recession as an automotive manufacturer. The most compelling vehicles on Earth. The most profitable vehicles on Earth. And we'll talk more about these points in a moment. In fact, vehicles that are so good, they sell themselves, and you don't even need to spend money tricking consumers to buy a shitty product. Superior technology, superior economics, in other words, much cheaper to own and operate. Big tick for electric vehicles in general, not just Tesla. You'd also want a shitload of cash in the bank, or cash equivalents, immediate access to large amounts of capital, should you need it. Tesla has about 20 billion in the bank, just for the record. Not bad. And you'd also want to be in hyper-growth mode, massively expanding your scale with insane amounts of demand, and most important of all, going back to the profitability, huge pricing power. Tesla has industry-leading profit margins in the automotive industry, and this is the single most important factor through this recession. Tesla's making 2 to 3 times as much profit per vehicle as other automakers are. 2 to 3 times as much. What Tesla will continue to do throughout the decade. I've been saying this for a long time. Tesla will sell every vehicle they make this decade. This isn't to say they'll sell every vehicle they make if they keep selling them for the exact same price. They won't. Their goal and their publicly stated mission is to drive the cost down. Given Tesla has massive profit margins, 2 to 3 times higher than other automotive manufacturers, what happens if demand starts to fall off a cliff? A linear decrease in price of a vehicle will cause an exponential increase in demand that can help fight and counter the loss in consumers willing to purchase a vehicle. But there's only so much you can cut the price of a vehicle before you stop making any money on it at all. In the case of Ford and GM, they can cut their vehicle prices by about a third as much as Tesla can before they stop making money. Tesla's profit margins 2 to 3 times higher, meaning Tesla has enormous pricing power. It's in Tesla's best interest to sell every vehicle they make this decade, even if, during a recessionary environment, they're making $0 in profit per vehicle sold. Flat margins. I'm not saying this will happen, but I'm saying it could happen, and Tesla would do it. Why? Autonomy. It is in Tesla's best interest to get their data collection centers out on roads to improve their autonomous software. It's also in Tesla's best interest to massively increase their current install base of users. Remember, when autonomy is solved, software becomes an increasingly more important revenue stream for Tesla, games, communication, entertainment, etc. Given the fact that Tesla has $20+ billion in cash and cash equivalents, they could even sell their vehicles for losses for years if it came to that, and they'd still make it out the other end of this recession. The same is not true for legacy automotive manufacturers with low profit margins in the first place and archaic technology that's already going extinct, already being disrupted by EVs. The long and short of it, of all of the world's automotive manufacturers, Tesla is far and away the best position to not only survive the recession, but to absolutely thrive. I believe the 2023, maybe 2024 recession will accelerate the demise of legacy automotive manufacturers. Now, there's another thing to discuss, and that's the huge amount of finance and the debt and the collateral and the collapsing value of the collateral from legacy automotive companies. I'm not going to go through that in detail, but spoiler alert, it doesn't end well. The value of ICE vehicles is beginning to plummet off a cliff. People are not seeing this yet, but this is currently happening. As the value of these vehicles collapses and many tens of billions of dollars of debt collateralized against these securities, now the loan to valuation ratio goes from something reasonable like 40, 50, 60% to 120, 130, 140%, where the amount owed is significantly more than the value of the asset it's secured against. It's a problem. Tesla is very well positioned to weather the storm. They have a huge amount of pricing power and flexibility, and it's in their best interest to continue ramping production and selling every vehicle they make rather than slowing their growth down. If they weren't developing autonomous technology, if they didn't have an unassailable lead in terms of robotaxis, it may be a different story. This recession will only serve to accelerate Tesla's progress and accelerate the demise of their so-called competition. It may be brutal, it may not be fun. We could see a temporary collapse in Tesla's profit margins. They could even go negative in the absolute worst case scenario. But even in that worst case scenario, Tesla still progresses, moves forward, and ultimately flourishes while others are torn to shreds. I'm not super confident that legacy automotive manufacturers will be able to survive this recession. Some of them might make it out the other end and limp forward for a few more years before they ultimately collapse, but it ain't going to be pretty. Keep in mind, consumers are a lot more cost conscious during recessionary times, and consumers who know how to use a calculator, which admittedly isn't many, but those who do may look at the cost savings of an electric vehicle and go, wait, how many thousands of dollars is it going to save me every single year because of the lower cost to own, operate, and maintain? I'm going to buy me a Tesla. And it won't just be a Tesla, other electric vehicles will actually be in popular demand as well. But Tesla, as we know, are in a league of their own. So Elon Musk's advice for investors in how to survive and thrive during the 2023 recession: avoid margin unless you have an extremely high risk appetite and are okay with being completely wiped out. Keep some powder dry, or alternatively, and this is my advice, not Elon's, this may not be necessary if you have relatively high regular cash flow from numerous income sources. And of course, don't allow your emotions to cloud your judgment. And as I said, a recession is literally the best possible thing that could happen to Tesla. Really. Believe it or not, with a long-term horizon, a recession is actually a massive tailwind for not only Tesla, but EV adoption in general. I'm not saying it's going to be fun. I'm not saying it's going to be a cakewalk, and I'm not saying there won't be some turmoil and a bit of blood in the streets. But what I am saying is when the dust settles, when the clouds part, when we make it out the other end, Tesla's going to be in an incredibly strong and even more dominant position. And one relevant piece of information to consider: Elon is quite confident that Tesla will solve autonomy relatively soon. Of course, Elon suffers from optimism bias, as do I, but just imagine if during this recession, maybe it extends all the way into 2024, just imagine if the first Tesla robotaxis gain regulatory approval to begin operating sometime during that recession. Right now, I think the stock market's forgotten that Tesla has industry-leading margins. They're growing at an insane rate. They have compelling technology. They're on the cusp of solving autonomy. They have the world's best talent. In fact, I think the stock market's forgotten literally every single thing about Tesla. Something to consider. And finally, don't forget to head over to Patreon with the card in the corner or the link below. Access 250 plus exclusive videos and, of course, optional access to my Tesla valuation model, including the bear case, which is an approximate representation of a worst case scenario, aka a recessionary environment for Tesla. I guess you could say, here's one I prepared earlier. So, see you over on Patreon. Love ya.